Good morning, ladies and gentlemen. How are you all doing? Wish you a very good morning and a great weekend ahead. This is Abhishekraj with the Daily Dossier in Ask Abhishekraj. So today, we will not talk about what stock you should be buying or selling. Today, we will talk about how markets have behaved and what to expect from the markets from here on. In last few sessions, I have been getting so many queries regarding how was I able to identify markets where they were at the top, and what exactly are the things that you follow and what do you look at to make a bigger picture. See, unless and until you have a bigger global picture of how market should behave, it would be very difficult for you to save money, to make money, and protect your profit. So let me quickly take you through all the data points, and then we'll discuss what exactly you should be expecting from the markets today and from here on. So first, let's sum up with the buying selling numbers. Overall, it was a fund outflow in yesterday's session. Foreign institutions sold about 1900 crores of cash, and index was sold about some 1800 crores. Then FIIs, domestic institutions bought very small number, almost 190 crores in cash market. Option buying was done by FIIs, that was to the tune of some 3000 crores. So of course the put writers who were stuck in the market, would have been covering up that intensified the selling as well in the market. And then stock futures were bought about 483 crores. Stock options were bought about 144 crores. So obviously these numbers are from the sell figures that we already had in past, and the short positions are getting covered up. So overall it was a complete negative market, and this market is something that losing confidence. The volatility rose extremely yesterday. It was over 12% positive. Few things good from the global front, like US markets were a little negative, then again they closed positive, so global cues are fine. Plus, as it's Friday, I have always told you Fridays are a little thinner on volume, so don't be aggressive, don't take aggressive bets on Friday. So let's take a look on how Nifty has been and what exactly you should be expecting from markets here on. Two things. Number one, if you closely look at this particular chart, what you can see, the recent swing that we had from 11,100 to 11,800, it has been over 100% retraced. On Thursday's session, on Wednesday's session rather, the 100% retracement was complete about 11,100, and yesterday's session fell even below 11,000. It touched 10,800. That was our targets on the lower range of the target. So what I'm trying to say, the last swing of the market has been completely chopped off. The buyers have been completely turned down, and so this is not called retracement. When you look at an uptrend market, what happened? Market goes up, retraces little, goes up, retraces little. So if you look at the chart in all the previous swings, you would never see 100% retracement. It would be 38% retracement, 50%, 60%, but not 100%. This is over 100% retracement. So what I'm trying to say, this particular fall is not retracing the swing highs, the recent swing. It is retracing the bigger trend. Now let me share on daily chart. In case markets go by retracing the bigger trends, what are the possible levels on the downside in Nifty? For Nifty, the downside levels are 10,156, 9651, 9146, 8427, and 7511. This is as per the daily charts. Now let's take a look on weekly chart of Nifty. As per Nifty's weekly chart, we are forming a kind of bearish engulfing pattern with good volumes, and that too we are engulfing almost 6 candles. So even if in case Nifty closes 100 points above, 100 points positive, it is going to be a very difficult week. It's extremely bearish. So from here on, as per the weekly charts, the price target that you could be looking at 10,174, 9170, 9670, 9160, and 8441. These are the retracement levels as per the weekly chart, and that too till 80% retracement only. 100% retracement would be 7500 as per the weekly chart. Now So having said that, we have already understood what exactly you should be looking at when we talk about downside. What if markets take a bounce? So that's also very important. So in case market takes a bounce, all we need to do is we need to look at the retracement of the current fall. So on the upside, if markets goes up, the first resistance would be 11,100, second would be 11,300, 11,200, and then 11,300. Fourth resistance would be 11,450 and followed by 11,625. So these are the resistances that you need to keep a check on. And don't go aggressive on buying. You should rather be looking at selling opportunities on these resistance level. Similarly, let's so this is how markets are looking on the daily chart. If you look at these four lines, these are all the moving averages. So now Nifty is very close to 20 days moving average. In case Nifty goes below this average, we are looking at a long-term downtrend. Now let's take a look on Banknifty. Banknifty again, Banknifty currently it's trading below all its key moving averages. 20 days moving average is now a steep downward slope, so as the 50 days moving average. The only thing is 20 days moving average is nearing the 50 days moving average, and if this trend continues, in case 20 days moving average falls below 50 days, that would be a death cross, and that's very bearish. Similarly, on Bank Nifty's daily chart, in case markets take a bounce, these are the levels that you need to be looking on for resistance. The first resistance is expected around 22,200 levels. Then we have 22,600. Then we have 23,320 levels. So these are the possible resistance point in case markets take markets go up. On the downside, the retracement that we are looking at, I'll just tell you the retracement levels from which you should be expecting on the downside. So this is the Bank Nifty's weekly chart. So what's happening on Bank Nifty weekly chart is we are currently in range of 61% retracement. In case there is any further fall, we could be headed towards 20,200, then we have 18,800, then we have 17,071. That's as per the weekly chart. So this is how you should be looking at all the indices. Nifty negative, Bank Nifty negative, sell on rise, metal index negative, but we have a hammer on a daily pattern chart. It may reverse the trend. We need to wait and watch. So overall, all the indices are negative as of now. We have no buying signal. What I would rather recommend, instead of looking for buying opportunities, wait and watch. Let us see. The trend may reverse as well. The trend may continue as well. Unless and until we have some confirmation, let's not be aggressive. So I have summed up all the important points, all the important prices which you should be looking at on the downside and on the upside. So in case markets start going down, your first zone would be in Nifty 10,600 to 10,700. Second point would be 300 to 400. Third zone would be 99.50 till 10,200, you can say. Fourth zone would be 9,700 to 9,500. And the last correction zone would be 9,100 to 7,600. Though I do not expect this massive correction. This correction had happened because of Corona, and nothing as such is happening. Unless and until we have some very bad news, we are not at all looking for that kind of level. But yes, 50% retracement can be there. And 50% retracement will take Nifty towards the 10,000 range. Now, on the upside, in case markets take a bounce, the possible resistance points would be, I have written it down. You can take notes out of it. Make sure you have these numbers. And in case markets take a resistance on the upside on these price levels, you should initiate short positions. Don't go aggressive in buying when markets take a bounce. See, whenever there is a downtrend that's beginning, there are many bounces to to trap the buyers. So don't get enthusiastic on buying. Rest in case anything happens which makes sense to buy. I'll keep you posted. So that would be all in today's session. Thank you so much for watching and listening. Do like, share, and subscribe. Abhishekraj signing off. Stay healthy, stay wealthy.